Hello, everybody. It's Rick Manning, President of Americans for Limited Government. Thank you for joining us today. We're going to talk a little bit about some of the things that are happening in the banking industry. I took a day off on this to try to kind of really our brains around it a little bit, and as opposed to just kind of the read and react that we were doing. And our initial read was pretty good about what's happening with the American bank system. But let me just recap where we're at. Everybody knows we had two banks that were taken over by the federal government. One Silicon Valley Bank, one Signature Bank. The Signature Bank was actually taken. It was a state chartered bank. It was actually taken over by the state of New York, and the federal government accepted that and said, yeah, that was a valid thing to do. They support the state of New York in their actions. The and the people at Signature Bank said, we were perfectly fine. What are you doing? So but when the government decides to take over your bank, you don't really have a say so. Then Silicon Valley Bank went off and had its own, it had its own problems, and its own problems there are a lot of problems in terms of Silicon Valley Bank. But I think we can learn something, because in Silicon Valley Bank, once again, there was a rumor. They had a quarterly report which showed some negative things. They'd lost 8% in the quarter. They had and one of the analysts was asking them, the average bank's losing 2. Why did you lose 8? And so there were some analyst questions that pointed that out. They said that they were about $1.2 billion need to raise. I think it was $1.8 billion in capital, which means they were going to issue stock to get new investors who are going to push money into the bank. And hearing that, some of the investors said, wait a second, we got a problem here, and decided that it was too risky of an investment for them to keep their deposits that were above $250,000 in the bank. And so they moved their deposits, and that snowballed. And quite honestly, no bank has, billions of dollars of deposits money sitting in their bank. If they do, they're not doing their job. So it's because bank's job is, George Bailey, as you know, anybody's watched It's a Wonderful Life, bank's job is not to have a bunch of money in their vault. It's to have the money purchasing other things. Those things could be U.S. Treasury bills, because to meet capital requirements, the amount of money they have to keep on hand, or they need to be kept on hand for safety of their depositors and the like. Also to invest in, offer loans to businesses and startups and the like, or businesses that are trying to get going. And so there's lots of different things that banks do with their money. Silicon Valley Bank was investing a heavy amount of money into particularly green startup companies in Silicon Valley. They put a tremendous amount of money into green startup companies, betting that the Green New Deal funding that came through Congress was going to elevate those companies, make them worth more, and allow them to get some of that capital back from them after providing the initial seed cash. They were doing that because many of those companies were unable to get traditional venture funding out of the Silicon Valley venture capitalists. So so they were providing that service. In exchange, it appears as though they were having those companies put the money, if they gave them $5 million, they might put $4.5 million into their bank, into Silicon Valley Bank. And then, they use the $500,000 to do the things they need to do. And then they were slowly drawing it down. Because remember, these companies don't have revenues by and large. They're research companies. They're developing product. So there's no real revenues. They're based on investors. So they didn't have any money coming in from their investments, and then they got upside down on the bonds because of interest rates going up, and they needed to raise capital. And some of the people who were big investors said, well, you might need to raise capital, but you're going to do it without me. We're not going to take the risk. And they moved, and then there was movement against the bank. And so there's a lot of, as one person said on here, go woke, go broke. In this particular instance, they bet on green investments and put appears to put an overemphasis on those investments. They were betting on long-term treasury bills because they paid a higher interest rate, but they couldn't exchange them. They couldn't sell them because the interest rates went up. And so those long-term interest bonds now became worth a lot less than they were when they bought them. So they lost money on them. And and so they got upside down. Were they doing crazy stuff? Yeah, it's reported that the head of their London office, which by the way, their London subsidiary, got sold to HSBC, a Chinese bank, for £1. So the Chinese bought a seat at the London table. Not that they didn't already have one, but they bought a seat. They bought the assets of the HSBC or of the Silicon Valley Bank branch in London for £1 whole. Pretty astonishing. And it's really kind of the Chinese saying, "Look at how strong we are. Their banks are failing. We're buying them." So it's a psychological play by the Chinese. I think much less so than a real financial ploy. But that's what they did. That was the net result in London. It was reported that their London representative, the UK branch head, or UK affiliate head, appears to have been hired more because of a desire to have somebody who showed equity in terms of hiring. She was very involved in the LGBTQ community, and apparently was a leader in that community. And so it was one of the things that they were doing to show that they were with it, that they were woke, and look at how inclusive they were. Just goes to show you that just maybe, you might want to hire somebody who's actually competent at banking, rather than hiring a bunch of people who fill and check all the boxes except for being competent at banking. So that's, but that's probably going too far. But the fact is, they were a very woke bank. When you put stakeholders, the people who want to tell you what you should invest in to benefit society, over shareholders who sit there and say, I really would prefer that we make a profit here, you get what you get. But knowing who this bank was, the shareholders, they were investing in a bank that was overtly woke. And so if the wokeness caused them to lose their investment, you made a mistake, you lose. The headline that we provided you guys was dealing with Credit Suisse, which is a bank based in Switzerland, big bank. You guys have probably heard of it. It's been all in the news today because the fact is Credit Suisse had done a report that said there was some material weakness in their bank. And because they had reported material weakness, investors were sitting there saying, well, who's the next? Is there going to be another bank to fall? And they looked at that and they say, this is a big bank that's reported that's got some structural problems, that's got some real challenges. And as a result, people started getting out of their stock. And they said, well, I'm not going to take a risk. There's a lot of banks I'm getting out of, but I'm getting out of this one because it's, essentially when the lions are chasing the herd of elk or antelopes, I guess, in Africa. And if they're chasing the weak and the old are the ones that end up getting eaten. The young get away because the ones who fall the back of the herd are the ones that get picked off. Well, Credit Suisse looked like they were at the back of the herd. And so the lions were circling. And what happened, I think, is instructive. There was bad news yesterday, and that the Bank of Saudi Arabia, which was a major investor in Credit Suisse, said they weren't going to invest any more money in it. They weren't going to pour any more money into Credit Suisse to keep it solvent in the event it needed cash infusion. Today, the Swiss National Bank essentially said, well, they did say, first of all, they said it's solvent. And secondly, they said any problems they were going to back up. So as a result, the Credit Suisse went down dramatically on the stock market yesterday, and today it rebounded. It rebounded some after market when the note of what the Swiss National Bank was going to do in terms of making it certain that it didn't fall prey to a bank run. So when we set this up, that wasn't the case, but subsequent from when we set it up, that's what's happened, and the stock in the aftermarket rebounded. I think it's up 7% from its low last time I looked. Bottom line is, what you're going to look for in these things, and what we're going to see, is banks that are, there's going to be people are looking around, saying what banks are weak, and they're going to look around. They're going to identify banks that appear to be weak, that have structural problems, have management problems, are upside down in some way, shape, or form, and investors are going to abandon those banks. And the irony, of course, is what's happening with both with like First Republic Bank, which is very similar to Silicon Valley Bank, same clientele. Out in Silicon Valley, is very tech oriented and way upside down in terms of, it has a significant percentage of its assets, of its deposits, are in accounts that are well above 250,000. So there's a massive liability there to the federal government, certainly. But it's only limited liability to the federal government. There's a chance that if you're a depositor, you're going to lose your assets. Because if it goes under, there's no guarantee. The federal government just implicitly guaranteed every bank depositor by what they did with Silicon Valley Bank. I'd be interested to see if they do the same thing, and I know they haven't in the past, for banks that were funding oil and natural gas startups in Texas and Oklahoma 20, 30 years ago. What happened then was they basically drove them out of business, and the depositors lost. Any depositor above the FDIC max lost their money. That's what happened. That's what happened in the oil patch when oil went through a slump back in the 80s. And but today Joe Biden said, "Oh, we're going to guarantee all of them." But we're going to guarantee them by basically charging the rest of the banks a premium to pay for it. So you have the rest of the banks are going to have to pay about 1% premium of tax to make up for the Signature Bank and Silicon Valley Bank, and ultimately you're going to pay that tax no matter what Joe Biden wants to say, because it's going to be passed on to you. Banks they're not going to pay the money. The interesting thing that's happening, and I think this is significant and we can't miss it because it's a direct, we talk about federal takeover of the banking system, and that's really what we're watching, at least an attempt to do that. The Federal Reserve is also saying that they are going to raise, they've got a window that they've always had a window open if you had an emergency cash flow, but they now have a special window open that they're encouraging any banks to go and use to take out a year-long loan to cover cash flow shortages that they might have. They have also encouraged the bigger banks to go and capitalize the smaller banks. We talked about First Republic. Well, JP Morgan Chase put in a bunch of money into First Republic. Now, they didn't give them that money just for grins and giggles. They're essentially buying a part of the bank. And if First Republic discovers that they need to sell, JP Morgan Chase is where they're going to go, because JP Morgan Chase already has bought a part of the company, one way or the other. They might have issued new stock. There's a lot of different ways to give money. Bottom line is, with the dramatically lower stock prices for small regional banks or mid-sized regional banks, there's the people with the cash, the people who remain calm will be the ones who benefit. So if you're sitting there and you're a massive bank and you're sitting on some cash in your balance sheet, or you go to the Fed and say, give us a bunch of money, we're going to go buy these banks. You'll see a buying spree and a merger spree of banks that are being consolidated, much like what we saw in 2008, 2009, where a lot of our local banks suddenly became bigger banks and then bigger banks, and you basically kept seeing a bigger fish come along and chew up and swallow the next bank, and we had a massive consolidation. Well, that's what you can expect to see with over the next year because of this. So the question really is, should we panic? What should we do? What can we do? Well, first of all, from a practical perspective, people who panic lose, usually. You know, we go back to It's a Wonderful Life, where George Bailey's sitting in the little dinky chair and Mr. Potter's sitting in the big chair across the desk, and Mr. Potter's trying to have him abandon the building and loan, and he's going to give him a big expensive job and all that kind of stuff. And George Bailey realizes that they're trying to essentially buy him out of business, and he decides, no, I'm not going to do that. And Potter says, the only two people in this town who didn't panic were me and you. You saved your building and loan, and I saved the rest of the town. So that's what ends up happening. Those who don't panic, those who have cash leverage, end up winning. And so the question is, as an individual, are you going to panic? And we all say, well, how much can I afford to lose? What can I afford to lose? And most of us can't afford to lose much. Just be honest. But the reality is, given that we have a bank, if it gets into trouble, is going to end up being able to go to a Fed window and get money. And more than likely, the Fed will loan the money to a bigger bank to take them over if they need to. It'll be rather capricious if the federal government decides to start driving banks into insolvency and taking them over, and then buying them out, or selling off the parts. It'll be much cleaner for them to effectively drive the price of the stock down, and then have a big bank come in and buy it at a massive discount, and buy the assets at a massive discount. And truthfully, that's what I would expect to have happen. So from an investment standpoint, I probably wouldn't touch banks with a 10-foot pole, but from a personal standpoint, I don't think there's any reason for anybody to panic at all. It's where I'm not, it's just the decision that was made to basically say all deposits are good, nationalize the banks. And while we need to, and that's wrong, and I think it's the wrong decision, and they expanded the intent of Dodd-Frank, the bill that governs banking that was passed in 2010, by covering all the deposits beyond what the insurance called for with FDIC. And that expansion will be, somebody's going to fight it. An investor in Silicon Valley Bank will probably fight it, because they lost their shirts, they lost their investment. So somebody who's a stockholder in one of these banks that's been taken over will likely fight it in court. And 3 to 5 years from now, we'll find out that the Biden administration was wrong, that they weren't allowed to and the question will be, could they do the massive bailout and expand the insurance coverage to everybody? Well, but 3 to 5 years from now, it doesn't matter. What matters is now. And so right now, you can put your money into the mattress, you get the same amount of interest. So that's one thing, but you never know who's going to come into your house. So it's one of those things that it's a trying time, but I would just recommend people be calm. I'm going to read some things here, and I'm just there are some things that Congress can do. I think we have to go after. We'll take a hard look at Dodd-Frank and negate some of the power that was given. I think we've got the Consumer Finance Protection Board, which is a massive. It's how the federal government controls the financial services industry, And and quite honestly, it's unconstitutional the way it's been built, and it should be eliminated. There's nothing it can do that Treasury can't. And lastly, I'm pretty confident that the broad, expansive powers given to the executive branch to shut down banks at a whim and declare any company a bank if they believe it's systemically important from a financial standpoint. That means, if you're too big to fail as a company, you can be taken over, and all the stockholders can get creamed. And that's a power that exists in the Dodd-Frank legislation that needs to be taken away from the federal government. So let's look at some of these questions. Let's see. Somebody likes what Michael's saying, so I'm going to see what Michael's saying so I can see if I like it too. Yeah, and Robert points out that First Republic got hammered in the aftermarket and it's still down. First Republic I predict it will be purchased by somebody very soon. Let's see what Michael says. Everything goes to crap when Democrats take control of our country every single time in my 60 years alive. You think people would learn something from that? It is interesting that we have I saw maybe it was a meme, and I generally don't judge my life based on memes, but I thought it was interesting. And it was, and the meme was, 3 weeks ago, it was poisoning East Palestine. 2 weeks ago, it was railroads crashing everywhere, a bunch of railroad derailments. Now it's bank closures. It's I didn't have that on my bingo card. Well, we do seem to buffet between crises that are at some level induced by the government. This crisis, for instance, was a decision by the federal government to close these two banks. And since none of us have the data, none of us have information what's going on, we do know that was a decision that was made and it triggered the crisis. The question is this, that we know that the Democrats, anytime there's a crisis, they look as an opportunity to grow government because they say, oh, the only thing that can solve it is government. The fact is we've got a highly regulated banking system. We've got a banking system that has massive regulations. It is anything but a free capitalist system. It is basically nothing more than a money moving system from the Federal Reserve into the economy. And the Federal Reserve has, through having basically zero interest rates for a number of years, pumped massive amount of money into our economy. And the banks were making a guaranteed 2% on that money. And so they were borrowing money at zero and they were selling it out for 2, 3, 4%, and sometimes 19% for credit cards. And so it's kind of a business that you couldn't screw up. And yet, here we are. And so maybe one of the things we need to do is we need to really scrutinize businesses that have gone completely woke and just say, we're not doing business with you. We're not allowing our investments to go into you. We're not going to have our lives messed up because you're being stupid and you're not hiring people based on their competence. You're hiring people based upon their political wokeness. And it's certainly something where we can demand that our state treasurers divest from these old uber woke companies, these uber woke investment firms, and just say, no, we're not going to put taxpayer dollars at the state level, our state bonding, our state, the college funds, that investment for states that have college investment funds, our state pensions. We're not going to put those into have companies that invest them, that are investing in dedicated woke investments, and we're not going to have them invested in companies that have as their primary goal to push a social agenda rather than creating an actual profit for shareholders. And so we can encourage our state treasurers, our state legislators to check the portfolio and blow out companies that are woke first and profit second. That's something that can be done. Those are real things. And the fact is, as those things occur, as the public demands, if you have money and you've got a broker, you call your broker and say, hey, I know you're investing my funds and you're diversifying, but I want to diversify out of woke companies. And so what can I do? That's something that can happen. There's certainly mutual funds that exist that are not investing in woke companies and deliberately don't do so. And so that's an option that you can do. Bottom line is the Democrats always look at opportunity as the crisis being an opportunity, and their opportunity is always to try to grow the government. As I look at it, the opportunity here really is to take a look at why Dodd-Frank failed. Their bill, totally partisan, passed by the Democrats and signed by Obama. Take a hard look at why Dodd-Frank failed and cut it to ribbons. Get rid of the Consumer Protection Board, Financial Protection Board. They don't really matter. They don't help. They're regulators who add costs into the financial system. So people like Elizabeth Warren, who was the brainchild behind the Consumer Finance Protection Board, can then complain with the strictures they put on the financial institutions cause the financial institutions to fail. Well, maybe that's, then she can come in and say, that's why we got to take over all the banks. So rather than allowing them to take over the banks, the nationalized bank system, we need to use this crisis as a means to defend the idea that, maybe the idea here is that these are so overregulated and they're so controlled that they fail, they don't succeed. They get taken over by the government at a whim, and the government doesn't have to even show its work. So let's see, so I think there's some things we can do, but on a personal level, I'm going to call a guy who I talk to and occasionally makes trades for me, and just ask him, I'm going to take a look at the few companies I own. I'm going to say, okay, are any of these guys ones I don't want to own anymore based on their wokeness? And I'm going to just take a look at the 5 or 6 companies and say, okay, are any of them out? And I'm going to make that decision for myself. And I can encourage you all to do that. That's one thing you can do, protect yourself from wokeness simply by getting out of woke companies. That bank failure was intentional for Satan's World Economic Forum's agenda, their evil digital currency. Richard, I'm going to tell you right now that I am not far from you in terms of the idea that the crashing the economy, crashing the banking system is at the same time that our government is attempting to go to a digital system. The one thing they can't stand is cash in the economy, because cash in the economy is something they don't control. And they want to control and they're going to say, we need to go to digital so we can keep these things from happening. Can't have a bank run, for instance, in a digital economy. Why? You can say, no, you can't have your money. Not your money. You can't have it. And as a result, when you're pushing a button, you say, hey, I want my money out. They can say, nope, we'll let you take $60 out, but you're not going to take $5,000 out or $10,000 out or even $100,000 out. They just say, no, you're not going to do that. And because as being digital, they can stop that from happening. So you won't be going to the bank, standing in line to try to get them to give you cash. Instead, you're going to sit there and not be able to get that cash because you will be prohibited from doing so. We all know the Chinese credit scores that have been implemented in China, where they're controlling currency and they're controlling the ability for people to do everything from take a flight to if they're not a good boy or girl to actually have a decent job if they're not a good boy or girl. And it's all based on controlling digital money in China. So that's a big deal, and it's something to pay attention to, and it's something that the guys who are supposed to be the good guys in Congress need to be. We're going to make certain that they hear. I'm in a meeting today on this. A lot of us are going to make certain that they hear that this is something they need to be careful of, and don't just rubber stamp whatever the Biden administration comes up with, because instead have their own proposals, and we'll help them figure it out. But have their own proposals to push back on, because the Biden administration will come up with a solution. It's a problem that's been created, and they're going to come up with a solution. And I would bet you that they had the solution prepared before they created the problem, because that's the way it works. Let's see here. Um, Alice Jackson. Let's see what you got. Show Dave. We're in a car going 100 and no brakes. You know, Dave, it sure feels that way. And one of the fallout aspects of this is a number of, I predict that you're going to see a big push to do, one of the reactions will be, we need to pass the debt ceiling increase now, or we need to eliminate a debt ceiling altogether and assure the financial markets that we're going to be able to pay our treasury bills. Okay. That's where the Democrats are going. They want to eliminate the debt ceiling altogether because they really don't want to have a discussion about the national debt every 2-3 years when we crash another $5 trillion into debt. And they don't want to have that discussion. They don't want to have to fight over it. They don't want the American public to be thinking about it. They want everybody to just whistle along as we go off the cliff. And so that's what they're going to, that's the solution they're going to do. And you're going to get a lot of big banks that are going to be, screaming, and you'll have a lot of financial analysts screaming that, if we really want to stop the bank crisis, we have to pass the national debt now or eliminate the national debt the debt ceiling altogether. And, and that's going to be a big challenge. That's going to be a fight. And your members of Congress need to hear from you saying, we need to deal with this systemic problem. And the systemic problem is the overspending by the Biden administration, truthfully, by the Trump administration, as they're dealing with COVID and the last big stimulus that was done in December of 2020. That was the primary cause of the inflation that was created. And the inflation that was created ended up blowing up the bond market and the value of bonds that people held in their portfolios. And as a result, you can draw a direct line between Biden's spendathon and the last December of 2020 bill that President Trump supported and signed. You can draw a direct line between those things and the overheating of the economy, which resulted in inflation flaring out of control. So yeah, that's there's something that can be done on that. We have to have the debts. We have to deal with the debt ceiling, and what I'm understanding that is being pushed internally is in the House with House Republicans. They haven't decided on it yet, but I understand this. What they're pushing is a 10-year spending budget that increases 1% a year for 10 years, but no more on the discretionary side. So it doesn't touch Social Security or any of the benefits off of that are about 65% of the spending the federal government does. But it'll be discretionary only, and it will increase 1% a year, and that would be the cap. And they think that's what they have a chance of getting done. Now, we advocated that they actually cut it 1% a year for 10 years, because everybody can understand that you can cut 1% of your budget. You can cut 1 penny of your spending for every dollar out of your budget without breathing too hard, the vast majority of people. And so you would be able, so that would, and certainly the government has lots of wiggle room to cut spending, let's say. So we thought that was a reasonable way to go, but apparently the Republicans have settled on a much more generous proposal towards not cutting spending, but only limiting spending growth by 1% a year in discretionary. And that's what's being pitched around. The Freedom Caucus is pitching it around, and we will see what happens. But that's kind of the price. That's what we're hoping. That's what some people up there are hoping will be an acceptable price to pay to get the spending, to move the debt ceiling up. So that's the battle. That's the real battleground. Nobody knows what I just told you. So you're now in the know. Dave, let's see here. Biden for resident. Well, that's funny. Let's see here. Wanda, do you think we're living the book of Revelation? I think we are. Um, I don't know. I don't know. I will tell you, a few years ago, I attend Bible Study Fellowship, which for those of you who are really interested in delving into the Bible without a lot of the various Protestant, Catholic, religion aspects of it, just looking at what the Bible says. It is, there are some things that indicate that we might be, but there's some things that tell us we're not. And I'd keep an eye on Israel. Ultimately, some things have to happen in Israel to make to really, tell us we're really there. I recognize that virtually every generation believes they are in the book of Revelation or in end times. And year 1000, people were convinced that end times were upon them because it'd been in 1000 years. And so we throughout time have kind of seen that as a continuing theme. Bottom line is, whether we are or we are not. I'm now speaking not as president of Americans for Limited Government. I'm speaking as Rick Manning, evangelical Christian. We have a responsibility. If we believe we're in end times, we have a responsibility to share the gospel with every single person out there, because we don't know who's going to accept the Lord, who's not going to accept the Lord, but we have a responsibility to make certain that they know the truth. And that way, those who choose to accept do so, and they aren't left behind. I will tell you that when you looked at, we're in the middle of studying the divided kingdom in BSF, and when you look at some of the things that happened right before the fall of Judah, right before the fall of Israel, which happened before the fall of Judah, for those of you who don't know. One of the kings, I think it's Hezekiah, before the fall of Israel, sent out people. He was restoring the temple. He was restoring in Judah. He was kind of a good king, so he was trying to get people back into worshiping and the like. And he reached out and he sent messengers out all over Israel, inviting people to come worship at the temple, to basically rejoin, to come back to the one true God. And so he was acting, in the sphere of influence of God. And so his reaction was to go out and invite, before Israel got crushed, which it did shortly thereafter. So it was and remember, Judah and Israel were divided after Solomon. So there was so Israel with the 10 northern tribes. And so that's what happened, so that happened. So that's what we should do. We should go out and we should invite. We should encourage. We should inform. We should go and make disciples. That's what we're supposed to be doing anyway. So whether we're in end times or not, our call from the Lord's the same. Go and make disciples. I hope that helps, Wanda. Let's see here. Now I'm going to go to the Trump question, Wanda. I think there's a lot of things that would be different if Trump was still in office. Okay, I think a lot of the challenges we have would be different. We still have challenges. I think Trump's right that that Putin would never have invaded Ukraine if Trump had been at the helm. I think we would have had, the Chinese wouldn't have been brokering a deal between the Saudis and the Iranians. We would have been brokering a deal between a chastened Iran with the mullahs out of power, as opposed to the Biden administration, which is effectively shoring up the mullahs against the people who want to get rid of the totalitarian rule in Iran. A lot of things would be different in the world, but we don't get to live in that world. And we can wish that the world were different. We got the world we got, and unfortunately, we have to react to that world. And we have to take the opportunities that are presented, have to deal with the crises that are presented in a way that make them that are honest and show an alternative. And quite honestly, we have to behave in a way that is attractive to others to say, yeah, I want to be like those guys. So we have to be calm, we have to be responsible, and we have to be tough enough to say no. And that's not always the easiest thing to do. So let's see here. I saw one of you said, money is dead, and I don't believe money is dead. Um, I believe some people like to kill it. I think the biggest challenge that's coming out of this is with China consolidating with Russia right now, with China working with Saudi Arabia right now. The Chinese have been trying to kill the U.S. currency for a very long time. There's something called the BRIC nations of Brazil, Russia, India, and China that 10, 15 years ago formed to try to take the dollar down as a world reserve currency. The move on Saudi Arabia, and Saudi Arabia is saying, yeah, we want to work with China, and China then getting credit for causing peace between Iran and Saudi Arabia, which it isn't really peace. It's basically Saudi Arabia saying tentatively that we can't depend on the U.S. to be our allies, so we don't want to get annihilated. So that's that's I think the reality of what that is. But bottom line is Saudis determine that oil will only be sold. Their oil will only be sold in U.S. dollars, which is one of the things that makes the dollar the world reserve currency. Something to remember is George Soros he made his money as a currency trader. George Soros caused the failing of the Bank of England, and made a fortune off of it. So if anybody understands attacking a currency, it's George Soros. And that's what his goal has been, to destroy the U.S. currency and destroy the United States by doing so, destroying our real soft power. And because quite honestly, one of the reasons why we can run a $32 trillion debt is because people around the world have to own dollars or treasury bills in order to actually be able to exist in the economy, because we're the world reserve currency. World reserve currency means that it's a universal currency that's used for all trade, okay, and particularly international trade that's going back and forth. You trade in dollars because we're the world reserve currency. And if we lose that status at that juncture, there's much less demand for dollars. The treasury bills that we're pumping out, in just incredible quantities, suddenly people don't need them as much. They are not compelled to buy them. And so they're going to have to compete based on interest rate with other dollars, with other currencies around the world. And we'll have a dramatically higher interest rate as a result. And that dramatically higher interest rate, just remember, with $32 trillion of debt, when we increase of 1% in the interest rate we pay over that whole 32 trillion is $320 billion. $320 billion. Joe Biden's budget was 6.8 trillion, which he proposed, and which is preposterous. But he has $6.8 trillion budget he proposed. Every 1% increases it by $300 billion. Our entire defense budget is $800 billion. So we're talking, and in interest payments the last year, overall, we spent more on interest payments, both to ourselves, the treasuries that are in the Social Security Trust Fund and things like that, as well as the ones we sell in the international markets. We paid more interest on those T-bills than we spent on national defense last year. That's how big our deficit is and the danger of it. At some point, we're going to, in not too long a period of time, we're going to end up off of the 1.6% average interest rate, which is what we paid last year. If we, and once again, every 1% increase is a $320 billion increase. So that's a challenge. That's a problem we have. And it's a big problem. And that's why we have to keep fighting on this debt ceiling thing, because the systemic risk to our economy is our national debt. That's the systemic risk to our economy. And so they want to talk about systemic risks and all that kind of stuff. We have to encourage the Republicans to stand up and fight against the true systemic risk to our nation. And that is the fact that we are essentially debt servants in so many ways. And we have to start pulling that back. And that's, it's just, just makes sense. Anyway, I am going to, I just want to give you the update on Credit Suisse because there was a lot of panic going around about it. And I really wanted to give the message that not to panic and try to give you some rational way of thinking about this and hopefully provide you with more information so you could be smart when you're asked about things and you can answer and certainly go and read and find out what other people are saying, because truthfully, it's don't just take, don't ever just take one opinion, because that's what they are. Their opinions. It's analysis, and it's opinion based on experience and what we can read and find out. But this is an opinion that is not in the predominant media, and I think it's which want people to panic. And I think it's important that we know what we're doing. We think about it clearly, and we handle ourselves in a way that is that doesn't create a self-fulfilling prophecy of kind of a massive banking crisis and throwing us into a Great Depression. So with that, I'm gonna let you go. Appreciate you hanging in, and have a great day. Tomorrow I will not be doing a live stream. I've got a little medical thing I got to do, but I should be back on Friday. So we will see you then.